Good morning, traders. It is 8:01 a.m. Chicago time on Monday, the 20th of March, 2023. One second. Got the guy talking in my headset. There we go. Past performance is not necessarily indicative of future results. Quick mic check just to make sure I'm talking. YouTube's working. All this stuff is working. Let me know. Let's take a look at the Convergent Trading pre-market summary sheet, which is quite busy today with everything that went on over the weekend. We had this Credit Suisse issue come across, and it's definitely is rocking the market. There's just an incredible amount of unsettling information that came through. This is a major international bank that is, it's funny, I used to do business with them, that apparently has gone under after just, I don't know, a century of operating. I have no idea how long Credit Suisse has been around, but I grew up with that, with their symbol everywhere around the cities where I lived in Europe. So very ominous. UBS threw a deal from pushed by the Swiss National Bank and the Swiss government. UBS is taking over Credit Suisse. What's interesting is that 16 billion of debt was written off, was written down. These are COCO bonds. COCO bonds or AT1 bonds. These are usually considered to be senior debt, and for some reason they were written off completely. They were marked at zero, but the common stock was not, which is highly unusual. The common stock, these bonds are generally more senior than common stock, but this is rocking the European markets, basically causing a contagion effect to take place. So that's the big story this weekend. It's a $250 billion market. So Fed Wednesday, BOE later this week. So let's look at what we've got, the key elements, the key pieces we have for this week. Today, not too much, just President Lagarde speaking. And then tomorrow we have the zoo economic sentiment. This is a major number out of Germany. Comes out at 5 a.m. Is that Eastern? Let me make sure my calendar's right because it's kind of messed up. Existing home sales. This is Chicago. Let me switch this. Switch it. So the zoo is 6 a.m. Eastern U.S. time. Wednesday, Great Britain's inflation rate year on year expected at 9.9%. And we have Wednesday's Fed rate decision. Goldman Sachs came out and has indicated that that it expects the Fed to pause at its March meeting this week because of stress in the banking system. A lot of pausing has been priced in. Huge movements. Big movements in the Treasury markets last week, as a result of this ECB, SVB and Signature Bank and so on. There's a lot of so for this week. So Fed rate decision on Friday at 2 p.m. The projections are going to be very important. The dot plot is very important coming into this meeting this week. They not only want to see if the Fed is going to pause, they want to see if there are projections for lower later in the year, which is what the market expects. On Thursday, we're looking at the BOE rate decision at 8 a.m. Eastern. The consensus is that they'll hike by 25 basis points. And then the inflation rate out of Japan that evening on Thursday, GfK consumer confidence as well. And then on Friday, we get Great Britain's retail sales and durable goods orders, and that wraps up the week. So this is a really big week for economic figures. So German zoo, Canadian CPI, FOMC, Bank of Canada, minutes, and then UK inflation. UK inflation and a lot of policy announcements. The European Bank, the SNB, actually, the Swiss National Bank, Bank of England, and then we get a bunch of flash PMIs and German unemployment. So a lot going on this week. What else is there? Moody's S&P further downgraded First Republic. First Republic right now is in horrible shape. This is another big bank that's really flapping in the wind. Flagstar Bank agreed to purchase Signature Bank deposits, some loans, and some loans. The Fed has extended the window. The FDIC extends the window to bid on Silicon Valley until March. There has been substantial interest from multiple parties there. Again, these are really momentous movements that are occurring. I haven't seen this kind of fundamental effect, so to speak, since 2008, 2009. China's President Xi set to meet Russia's President Putin in Moscow. By the way, President Putin was supposedly went to Mariupol this weekend. There are rumors that it was a body double. It wasn't really him, but who knows? Misinformation is a very important part of war. Massive protests in France over the pension reforms. Looking at the S&P, so there's just a lot. I should have just summarized the whole 8 minutes or 7 minutes to, hey, there's a lot going on. Go pick up a newspaper. That really is what I should have done right there. There's just too much going on. The volume on the S&P auction this morning is multi-distribution. We actually are positive on the day versus Friday's settlement in the S&P, the NASDAQ, the Dow, and across the board, all the indices are positive. Europe, the Euro Stoxx 50 popping higher miraculously despite the Credit Suisse news. But we're positive, and what the market has done is it has dropped pretty hard this morning and came all the way back and has gone positive on a multi-distribution auction. Pretty active price discovery today, which means to you and me, the layman traders, it means that we are very likely to see pretty poppy action and a lot of movement. So the range is 81 points, 481,000 contracts traded in the S&P. Remember, the mode here is 280,000 as shown below in the overnight statistics box. Very important. These quantitative measures are very important in telling us how things are versus where they are normally. And then the point of control in the overnight session, surprise, surprise, is at 39.50, which is basically around Friday's settlement. So that's going to be a key magnet this morning. Is this temporary magnet today is at 39.50, big area of the mid-century. And we fought a lot on Friday against that 39.90, 39.92. We couldn't breach the 4,000. And that's where we are. So let's take a look at the charts, shall we? Here's the TPO chart, just looking at things from the big picture perspective. We had some big movement here that carried us down last week, and then we've basically been consolidating in what is a box right in here. We've basically formed a box between 39.70 and 38.70 or so, 39.70, 38.70. And what we did is on Thursday, we poked through this box later in the session. We shifted the entire auction higher and above the box. But what happened on Friday is that we came right back in what is a B-shaped profile market opening at the high. This shows excess up top, and then it settled. The auction just spent most of its time down below. This is a long liquidation, and it brought us back into the box. So we have tested below the box and above the box, and we're in the box right now. 39.61.50 is the current trade. Pretty thin, the S&P this morning, relatively thin. There's likely to be quite a bit of running. The rotation studies, by the way, have gone up. The rotations across the board. Remember, we like to look at this every Monday. I updated them for Convergence members this morning. The rotations have dramatically increased, especially in the treasuries. I think they jumped from like, what is it, 10 to 13 ticks or something on the impulse in the treasuries. Yeah, jumped from 10 to 13 ticks um, on the treasuries, which, the treasuries kind of been hovering between 8, 9, and 10 for the last 6 months or something, and they're breaking up to the breaking out to the upside. And what this is telling us is that there's quite a bit of volatility coming into the market. So what you have to do is you have to start looking at those rotations that I just pointed out and adjusting your stops. My stops are going up to 4 points. However, I'm managing trades very tightly. This is an environment where it either needs to go right away, or we step aside and take another stab once it's gone, if it has gone in that direction. So I'm just not giving the market too much room. Again, the box is 39.70 to 38.70, right in here, and we are just below it here, 9 points below the top of this box. Once we get out again, if we get out and use the 39.70 as support, then you're looking at the poor structure left behind, what is it, 2 Thursdays ago or something like that, or Friday. What day was this? Friday, I guess. Yeah, Thursday. This was the Thursday, the SVB Thursday. So now you're starting to correct this this weak single print structure and work back up to the 40-50 area up above. 40-50 becomes the next key zone, and then you're back in this upper box right up here. Lots of boxes, and I'm not talking about Darva's boxes, but they're boxes. So that's what it looks like. So this morning, the key thing to take away is, how does it respond? How does it respond on a push? So here's what's happened in the overnight session. You can see Friday we opened really clear opening swing. I wasn't here for this, and we poked the opening swing to move back up towards the prior close, and sellers came in. Nice little pullback here, didn't quite get to the 50%, and then boom, it just drops. And what it did for the rest of the session on Friday, being as it was triple witching Friday, there was a lot of volume going across, but no real movement. And what it did is it kind of established this lower distribution on this, again, B-shaped profile, so it's accepting these lower prices. We have spent the same amount of time this morning right here, so you can see that it tried to pop higher. Credit Suisse, they worked hard over the weekend to resolve the Credit Suisse issue and make it look like everything is hunky-dory in the banking sector, but it did end up selling off. And then once, here's a nice, by the way, this is exactly the structure I look for. Big impulse, look for the pullback, couldn't quite get to prior low here. Look for a pullback to a previous reference and look for the continuation. Shoot for the impulse low, look for the continuation, and since then it has pulled back to the mid for a nice little rotation there. This is a virgin test of the mid, so this is a setup for me. And then once it got above, it sat sideways, and the sitting sideways part is right in this range that I'm talking about. Oops, my mouse slipped down. Right in this range, and we are above it. So this looks to me like it wants to push higher. We have a weakish high in the overnight session, and we are likely to make it through the LIS up here at 39.70. See this low volume node from Friday. This is part of that box structure. 39.70. So you want to watch 39.70 this morning, really important. And the idea is if it pushes through the 39.70, pulls back and doesn't push down below 39.70 by much, or has a weak pullback, then the sellers are losing control, buyers are controlling the auction, and it's very likely to start moving through the 4,000. We have a prior high right up here at 99 from last week, last Thursday, and then it is very likely to push to 4,000. Expect some turbulence here at the 4,000, and then that is likely to become a base for a squeeze to the 40, 60, 70 area up there. So this is how things are kind of shaping up in the bigger-ish picture. See this? If you look at the NASDAQ, by contrast, the NASDAQ is relatively stronger. The NASDAQ, the S&P took, went up like this. It looks like this on Thursday, but then the S&P traded down here on Friday on a B shape, and the NASDAQ's holding a little bit higher. The NASDAQ's ready to kind of scream higher and push through. So this is what that looks like. Yeah, not much more to say here. Let's see. Let's extend this profile forward and see what we've got. Let's take a quick look at crude. Crude really trying to stage a recovery this morning. Crude opened, has tested down, and is coming back up. It opened at 66.91, has tested down, and is pushing higher. Crude has closed the prior settlement. Crude is very likely to go into balance in this zone here. Crude is very likely to be stuck between 70 and 65 here for a bit. Crude isn't getting any relief. It's just the whole reopening trade from China and so on didn't really take us anywhere. It's not seeing much in terms of any breaks. The over underline in crude is this low here, which had quite a bit of volume in it. Actually, if you look at the volume profile, quite a bit of blunt volume on this low. Then we gap down, and so around 71.50, below 71.50, I'd expect continuation lower. 70 was the key number in this area, the key swing low, and it's kind of staying below. We're one time framing down in crude. There's a lower high, and so you want to pay attention to Friday's high in crude as an initial sign that there's a reversal going. The Friday high was 68.27, I believe. So unless it takes that out, to me, you want to sell pops, or would be looking to sell pops, and I would expect this low to go. It did manage to put in a tail on Friday. It pushed down and came back in into balance, and it formed a point of control, a composite point of control on Friday in the 66.80 region, something like that. Right where we are now, it has a bit of a an MC point of control in this area. Okay, so that's crude, NASDAQ, ES. The plan again is to watch the 70 this morning, the S&P. That's the key. And then we want to watch how it behaves around the 70. If it pushes through and holds, I'm going to lay off the shorts, and I'm going to be pushing and squeezing the longs. If it goes to the 70, is unable to hold the 70 in the S&P, right in here, if it's unable to hold the 70, again, 70, right? If it's unable to hold the 70, if it comes in, kind of pokes through, and it falls back in, then you're looking for it to come back to the prior settlement and to move back towards the low end of the range this morning, which is not likely. There's a lot being done to support these issues that we have currently, and I'm expecting that to continue. I'm expecting the market to see a relief rally back into the 40-60 area. Okay, I'll leave you with that. Good luck today, and I'll catch you tomorrow. Remember, the Fed's on Wednesday, so the trade is going to be pretty jerky until that happens. Good luck.